This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC Plus agreed its deepest cuts to oil production since the 2020 COVID pandemic at a Vienna meeting on Wednesday, curbing supply in an already tight market despite pressure from the United States and others to pump more. The cut could spur a recovery in oil prices that have dropped to about $90 from $120 3 months ago on fears of a global economic recession, rising U.S. interest rates and a stronger dollar. The United States had pushed OPEC not to proceed with the cuts, arguing that fundamentals don't support them, a source familiar with the matter said.
Europe may limp through the cold winter months with the help of brimming natural gas tanks despite a plunge in deliveries from former top supplier Russia, only to enter a deeper energy crisis next year, the head of the International Energy Agency said. European countries have filled storage tanks to around 90% of their capacity after Russia cut gas supplies in response to Western sanctions imposed over its invasion of Ukraine. Gas prices, which surged in the months after the war began, have retreated, but that could be short-lived as countries compete to buy liquefied natural gas, LNG, and other alternatives to Russian pipeline deliveries.
Moving on to the top news in the energy sector.
Indian state refiners plan to lock in more of their crude supplies in term deals, worried that tighter Western sanctions on Russia, including from the EU, could curb future supplies in already tight markets, sources at state refiners said. Indian Oil Corp, the country's top refiner, and Bharat Petroleum Corp are seeking term deals with countries, including the United States, industry sources said. We are preparing for a backup plan. When the world is uncertain because of Russia-Ukraine conflict, we need to have all options open, said an official at one state refiner.
Germany will subsidise consumer power bills next year by paying €12.7 billion, $12.6 billion, towards the usage fees charged by the four high-voltage transmission grid companies, TSOs, government and industry sources said on Wednesday. The fees form part of electricity bills, accounting for around 10% of overall costs for retail customers and around a third for industrial companies in sectors such as steel or chemicals. The intervention could stabilize the fees, the sources said, which otherwise were set to jump given runaway wholesale power prices and rising operational costs for the TSOs.
Next, we have the top news in metal markets.
Gold-supplying banks have cut back shipments to India ahead of major festivals in favor of focusing on China, Turkey, and other markets where better premiums are offered, 3 bank officials and 2 vault operators told Reuters. That could create scarcity in the world's second biggest market for gold, and force Indian buyers to start paying hefty premiums for supplies in the approaching peak demand season. Leading gold suppliers to India, which include ICBC Standard Bank, JP Morgan and Standard Chartered, usually import more gold ahead of festivals and store it in vaults. But vaults now hold less than 10% of the gold they did a year ago, the sources said on Tuesday.
Global copper smelting edged up in September, but remained below the 2-year average as negotiations ramped up between smelters and miners for treatment charges, data from satellite surveillance of metal processing plants showed on Wednesday. Weaker smelting activity in China, the world's biggest refined copper producer, was mainly behind the lackluster readings, according to a joint statement from commodities broker Morex and Savon, the satellite analytics service Morex launched with Earth Eye in 2019. Miners hold talks on how much they should pay smelters to process their raw material in the weeks ahead of industry gathering London Metal Exchange Week in late October. We will now look at the top news in the agricultural sector. European Union sugar production is forecast to fall by 6.9% in the 2022-23 season to 15.5 million tons following a drop in planted area and a severe summer drought in many parts of the trading bloc, the European Commission said in a short-term outlook issued on Wednesday. The drought led to a drop in sugar beet yields of 4% while the planted area also decreased by 4%, the report said. Consumption of sugar rose in 2021-22 by 5.6% to 16.8 million tons, partly driven by an inflow of Ukrainian refugees, but is seen falling back slightly in 2022-23 to 16.6 million, a decline of 1.5%, due to increasing prices for the sweetener.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.